Hi and welcome to munshigiri.com. In this tutorial, we are going to talk about Chapter 9 of Companies Act 2013, which is about the accounts of the companies. So in this Chapter 9, we have a total of 11 sections, starting from Section 128 and ending on Section 138. So in this tutorial, basically we'll be covering about Section 128 of Chapter 9 of Companies Act 2013. So let's begin with it. First is Section 128. This section talks about the books of accounts to be kept by the company. To be kept by the company. This section is applicable to all the companies, that is, whether it is a private company or a public company, this section applies to both. That is applicable to private company plus public company. So BOA here refers to the books of accounts. So earlier this was Section 209 and 214 of the Companies Act 1956. So this Section 128 has been made by merging two sections of Companies Act 1956, that is Section 209 and Section 214 of Companies Act 1956 now becomes Section 128 of Companies Act 2013. So it says that every company shall prepare and keep its books of accounts at its registered office. The first point is the books of accounts to be kept at the registered office. The books of accounts to be kept at registered office for every financial year. Now the point to be noted over here is that what actually we mean by the books of accounts. Now it says books of accounts includes three things. The first one being the books of accounts itself. Say it right. Second is other relevant books and papers. Books and papers. And the third one being the financial statements. Now it says that books of accounts includes books of accounts. Books of accounts in relation to what? In relation to three things. That is in relation to sales and purchases. Sales and purchases. Assets and liabilities. And income and expenditure. Other relevant books and papers includes deeds. It includes deeds, vouchers, writings, documents, minutes, and the registers maintained by the company. The third thing is financial statements. Now we have a Section 129, that is the section next to it of the Companies Act, which talks about the format of financial statements. So let's basically cover here what financial statement actually means. Now it says financial statement means statement of profit and loss, balance sheet, cash flow statement, cash flow statement. Now cash flow statement is exempted in case of one-person company. Statement of changes in equity, and the notes to accounts. So all these form part of the financial statements. So this is all we have covered till now. A company has to keep its books of accounts at the registered office for every financial year, and books of accounts means these things. This was the first point we covered. Now the second point is that a company may keep any or all of its books at any place other than the registered office. Now for that, there are certain conditions that are to be complied with. That is, any or all of its books may be kept at any place other than registered office. There are certain conditions that is provided. First condition is that such other place must be in India. Second is that a board resolution must be passed. A board resolution shall be passed. And third thing is that the company has to intimate the registrar. That is, the company shall give notice in writing to the registrar within 7 days of passing the board decision. The board decision must specify the full address of the other place where the books of accounts are kept. That is, this notice to specify address of other place, that is other than the registered office where books of accounts are kept. Now this was the second point. Now let's come to the third point over here. It says that in case a company is having a branch office, then books in relation to the branch can be kept at the branch office. That is, third point is relating to the branch. Books in relation to branch to be kept at the branch office. And what the branch will do, branch shall send the summarized returns to registered office. And in case the books of accounts are not kept at the registered office, the case that we saw right now, that the company has removed its books of accounts and kept it any other place, then in that case the branch shall send the summarized returns to such other place where the books of accounts are kept, and such returns shall be sent by the branch periodically, that is every 3 months. Branch to send summarized returns to registered office or where the books of accounts are kept periodically. Periodically means every 3 months. That is, the interval should not exceed 3 months basically. Now comes the method of preparation of the books of accounts. Fourth point. Method of preparation of books of accounts. This point states that the books of accounts must give true and fair view of the affairs of the company, including the branch office. The first point is give true and fair view. Second is it should explain the transactions effected at board office or registered office. Explain transactions. Next is prepared on accrual basis and as per the double entry system of accounting and double entry system of accounting. Now comes the mode of keeping the books of accounts. That is, how can the company keep its books of accounts? Whether it has to keep its books of accounts manually or whether they can be maintained in the electronical form. So this is the fifth point. Mode of keeping books of accounts. Now the company is basically free. It can keep its books of accounts either electronically or manually, the way it suits to the company. That is, it can be kept manually or electronically. Now, but if the company keeps the books of accounts in electronic mode, then it has to take care of certain things. That is, the first thing is that the records shall remain accessible in India so as to be usable for subsequent reference. So let's look at it like this. The first point is the records shall be accessible in India. Records accessible in India. The records must be retained in the original format. The first point is records shall remain accessible in India so as to be usable for subsequent reference. And the second point is the records must be retained in the original format and unaltered. Original format is unaltered. Then the information in the electronic record shall be capable of being displayed in a legible form. There shall be a system for storage, retrieval, display or printouts of the electronic records. There is storage, retrieval and the printout. The backup of the books of accounts etc. maintained in electronic mode, including the place outside India, shall be adequately stored in servers physically located in India on a periodic basis. That is, the backup should be in a server physically located in India. This is in a case when the books of accounts are maintained in electronic mode, including the place outside India. Now the next and last point under this is the records should not be disposed of or rendered unusable unless permitted by the law. That is, don't dispose of until the law permits. So now, filing the annual return with the registrar, the company has to intimate the following things to the registrar. That is, while filing annual return, with registrar, company to intimate certain things. The First is the name of service provider. The IP address of service provider. The location of service provider. And in case the books of accounts are maintained on cloud, then such address as provided by the service provider. Then the address provided by service provider. So till now we have covered 5 points under this section. Now comes the 6th point. It says that the books of accounts to be maintained for at least 8 financial years. Maintenance of books of accounts, that is for 8 financial years. So in case the company is in existence for less than 8 years, let's say the company is in existence for 5 years only. So it's obvious that in that case the company will be maintaining the books of accounts for a period of 5 years only. So now where the investigation of company is ordered, then the central government may direct the company to keep its books of accounts for a longer period of time. That is in case of investigation. In case of investigation, kept for longer period. That is as per direction of the central government. Coming to the 7th point in this section, we have is who are the persons responsible for maintaining the proper books of accounts of the company. That is persons responsible. Persons responsible for maintenance of books of accounts. For maintenance of books of accounts. The managing director of the company or the whole-time director who is in charge of finance or CFO or any other person of the company who is charged by board with such duty. This was point 7. Now comes the point 8, which talks about the inspection of books of account. That is, who are the persons who can inspect the books of accounts of the company. Inspection of books of accounts. Now the books of accounts are open for inspection during the business hours. Inspection can be done only during business hours. And who can inspect the books of accounts? Now we have inspection of company's books of company or its branch. The inspection can be done by any director. And in case of any subsidiary of the company, then the inspection can be done by any director who is authorized by the board through the board resolution. Authorized by board through board resolution. That is, in case a director wants to inspect the books of account of company or its branch, he does not need authorization by the board of directors, or no board resolution is to be passed for the same purpose. However, in case of a subsidiary company, the director needs authorization by the board in case he wants to inspect the books of accounts. Now, an important point here is that only a director of the company can inspect the books of accounts and not its representative or the agent. Okay, now there can be a case over here that the books of accounts of the company are not kept in India. That is, books of accounts are maintained by a company outside India. This can be a case in the case of foreign branches of a company. Example, the foreign branches. In that case, the director concerned shall request the company in writing for inspection of books of accounts of the company. Now, the company on the receipt of request of director, it shall produce the copies of financial information to director within 15 days of such request. Now, the director shall written request to company, and the company on receipt of request, it shall within 15 days from the date of receipt produce allow the inspection and produce the copies of financial information. Now the last point under this section is punishment for contravention. Punishment for contravention. In case of failure to comply with the provisions, the persons responsible to maintain the books of accounts shall be punishable with. Who shall be punishable? Persons responsible to maintain books of accounts shall be punishable with imprisonment, that is up to 1 year, or with fine exceeding 50,000, that is the minimum of rupees 50,000 and which can go up to rupees 5 lakh, or both. So thank you for watching.